Hello, and welcome to the October Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. September was a tough month for the financial markets. It started off with a big drop, then spent the rest of the month recovering. We still ended the month with everything down, but by much less than we had feared. Despite the weak September, though, returns were much stronger for the quarter, reflecting continued medical and economic improvement. On the whole, investors have continued to favor markets as risks have remained contained. September was also difficult from a medical perspective. Case growth started to pick up again during the month, driven by faster infection spread in a majority of states. This is a reversal from August and likely reflects both Labor Day effects and the reopening of schools and colleges, both of which have generated more infections. We've likely not yet seen the full effect here, so this was something we'll need to watch. That said, though, the virus still remains under control at a national level, and the data has improved over the quarter. Fears at the start of the month that a third wave could be starting are so far not happening, and that's a positive development. But while medical concerns remain, the economic news was better. At the start of the month, there were signs of weakness in the recovery, with jobs and consumer confidence particular concerns. We got meaningful improvement in those during September, with better data from the labor market and with consumer confidence bouncing back. As a result, consumer spending has held up better than expected, even as business confidence and investment has also been healthy. So, despite the worries, the recovery still looks to be on a solid foundation. And this overall improvement also helps explain the markets this month. With a drop at the start of the month on rising medical and economic risks, the fact that so far those risks are still moderate has helped markets recovery. We'll likely get more volatility going forward, but for the moment, as the data remains constructive, the momentum is positive once again. So entering October, we're in a better place than we were a month ago, but we still have things to worry about. Case growth is edging up, and a third wave is still a real possibility. From an economic standpoint, the news has been better than expected, but still slower than in previous months. And finally, of course, we do have to watch for the effects of the election. Last time we saw the partisan conflict take a toll on the economy, and that could well happen again. But despite those very real risks, the reality is that conditions are still favorable. While the medical risks are real, we know what to do to mitigate them, and we're doing it. While we did see a slowdown in the recovery, activity has picked up again. And while the market did drop, it's since started to recover. So while the risks are real, so far they're contained, even as things continue to get better. That's it for this month. Thanks for watching. Join me in November for the next monthly update. But until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We'll get through this together.